MCX IPF and CNBC TV 18 present Commodity Classroom. Commodities as an asset class.
Hello and a very warm welcome to MCX IPF and CNBC TV 18 presents Commodity Classroom. The focus today is on commodities, the asset class. Well, commodities have been on a move the last 12 or 18 months. It actually has been making all the right headlines. We've seen prices being very volatile. They've been surging up. And there is so much conversation that is happening around the world, which has been impacting commodity demand, supply, prices. And we have seen that impact come in for the rest of the economy and other asset classes as well. So this perhaps is the right time to start investing in commodities, start hedging into it, and include it in your portfolio to make that perfect portfolio there. Well, in Indian markets as well, even as it has been pandemic, we have seen newer products and participants enter into this market. The commodity market regulator, SEBI, also has opened up this space for options and futures, as we've seen, and indices as well. And we have seen newer participants as well come in, whether it has been about the bank broking subsidiaries, AIFs, PMS, and mutual funds as well. So and that clearly has strengthened the markets in all levels, on all senses. The question that we are asking our panel today is on how beneficial is it to start, investing in commodities? What is the best way to do that? How are retails and institution markets making use of this space? And the bit of a gap that we are seeing in that space in sense of participation, how do we bridge that? Joining us to have that conversation with us is now Mr. K.K. Maheshwari. He's president and me. We also have with us Mr. Ramesh Varkarkar. He's head commodities and currencies, ICICI Securities Limited. Mr. Rishi Nathani is head business development and marketing at MCX. We also have with us Mr. Ashok Agarwal, who's director Globe Capital Market Limited. And then we also have Mr. Narendra Wadhwa, who's president CPAI. Gentlemen, hi, and thank you so much for joining us today. Rishi, why not we start with you? And yes, we have seen market turnover go up. The last few years have been quite positive when we look at the commodity markets. How have you seen the new entrants in sense of products and participants, and how has it benefited the market overall?
We have been seeing increasing number of products and participants in this market thanks to our regulator SEBI. In terms of products, earlier when we started, we only had futures on commodities. Thereafter, we got options on futures, and then we got options on goods, and now we have index futures. So we have quite a lot of now products in these markets. And last year, in between the pandemic, we launched the two index products, the Bulldex and the Metaldex, and we saw a very good response from the market on both of them. In terms of participants also, earlier we only had individuals and corporates, but then we got category 3 AIFs, mutual funds, portfolio management services, and eligible foreign entities to be enabled to be participating on these markets. And we've seen some healthy response from these participants. Of course, as we go ahead, we will see more and more. But at present also, we are seeing some mutual funds actively participating on our platform through their various schemes. New schemes are being launched, and we are very hopeful of seeing growing institutional participation in these markets as we go ahead. Also, in terms of retail and corporates, we have seen more and more corporates getting onto this platform for the hedging requirements, and individuals have been accessing this market for hedging, for trading, as well as for investing through the delivery-based commodities that we offer.
Mr. Maheshwari, this question is to you. Every market needs a bit of a push and a nudge, and regulator and the exchanges need to work for it, and media as well, and that's exactly what we have been doing. But when it comes to initiatives being taken to ensure that all stakeholders are in that market, whether it is about institutions or HNIs, what is the work that is being done and needs to be done to ensure that this market sees that participation in abundance?
Sectoral indices represent a basket of stocks of a particular sector. Investing through indices helps in taking a position across commodities and is not commodity specific. Investing through indices helps in diversifying one's risk and building indexes, and indexes is less volatile in comparison to single stocks commodity. It is more liquid, resulting in minimum impact cost and facilitates efficient price risk management. On the MCX, trading takes place into sectoral indices. We have the billion index, MCX Buildex, with the underlying as gold and silver. On the base metal index, we have the base metal MCX Metal Dex, with the underlying as base metal comprising of zinc, copper, nickel, lead, and aluminium. The exchanges have a robust, efficient, and a transparent system in place with efficient margining system and risk management system and settlement guarantee for trades, which are all a prerequisite for HNIs, institutional investors, mutual funds, and each individual participant who look at it and which makes them participate in the market.
Mr. Agarwal, this question is to you. What is a portfolio? Let's not call it a perfect portfolio, but how should a portfolio building be? What part of commodities, and especially now that we have products like indices and options?
For any portfolio construction, commodity needs to be a part of the portfolio. See, in last 1 year, the rate of crudes have gone up almost 100%. So if you are somebody, let us say you are a airline or you are a fertilizer industry, or even you are a trader in the market, if you don't take a bet in crude, maybe you are missing a vital link. And if you are a user industry, I think your cost of operations may become unviable if you don't hedge your position. So similarly, indexes, the beauty of indexes is like if you hedge in metal and you take a metal future, you may have to take delivery. But if you hedge in indexes, you don't have to go for the hassle of delivery, and you can take a balanced view of that particular sector also. So commodities should definitely be a part of your portfolio. In fact, even if you are somebody who is in capital market, it keeping track of commodity is a must.
Mr. Ramesh, this question is to you. So we're jumping from one asset class, or rather one set of participants, to another set of participants. So when we talk about commodity indices opening up, it actually makes every new product that comes in makes the market way more accessible to all stakeholders. How have you see that penetration go in, and what is your sense when it comes to risk management, when it comes to hedging, as Mr. Agarwal was also pointing out, how is the market making use of this?
Commodity indices solve one of the biggest challenge which is faced by a retail investor or any of those traders, because they are exposed to a single stock, and whose positions and margins are all considered in a single commodity. So the risk is higher. With the rally, as you mentioned, in the prices of base metals or energy, almost the prices have doubled. Right, the margin requirement, all the contracts like copper, nickel is more than 20 lakh rupees value today. The contracts like zinc, aluminum, lead is more than 10 lakh rupees. And margin requirement at 10% is pretty high, where one gets exposed to a single commodity. So indices solve that problem, because all the investments are not focused on only one single commodity, but they are spread across. So you're asking about the risk management. Yeah, indices are a great tool for portfolio and risk diversification. Point two, indices are very simple and easy to trade, as they're all mid-sized contracts, the value between 5 lakhs to 10 lakhs. And most importantly, they're all cash settled. The contracts that we talked about on the base metals are compulsory delivery. So he or she, whoever has got the position, needs to look what they need to do before it gets into the staggered delivery or a tender period. So these are all cash settled contracts. So great products for any of the retail or corporate or even institutions to participate in this.
We talk about commodity indices acting as a catalyst to attracting a broad-based participation into these markets. How do you see it, Mr. Wadhwa? And what still is more required to ensure that people do come out and they hedge and participate?
For any development of the commodities market, 3 P's are required. One of the P is products. I'm happy that our regulator SEBI is proactive and introducing, and so is our commodity exchanges, who are continuously introducing various products. One of the products which was awaited by the industry are indices on various commodities. And I am happy to share with you the kind of turnover and rise we have seen in the Boltex and the base metal contacts is really encouraging, and people are participating in that. Commodities have also emerged as a very important asset class for Indian investors who had very much faith on gold and silvers. They have been investing in these commodities through ages, basically. So they can participate in futures also if they don't want physicality of it. The beauty of these indexes are that they are cash settled. So if they don't want, the investor don't want the delivery of it, so they can opt for these futures. And I am quite hopeful that going forward, we are going to have a great liquidity in indices. And these indexes, when they are popular and widely traded, they bring liquidity to the underlines also. So going forward, the underlines also, like gold and silver, and in the energy space, crude as well as gas, they are going to have a greater liquidity going forward.
MCX IPF and CNBC TV 18 present Commodity Classroom. Commodities as an asset class. MCX IPF and CNBC TV 18 present Commodity Classroom. Commodities as an asset class.
How do you look at all of this, Mr. Maheshwari? The kind of volatile commodity world that we live in right now, and how imperative, how important is it to ensure that we hedge our risks on commodity exchange?
Strategies are used by investors to reduce the risk in the event that an asset in their portfolio is subjected to a price change. Traders, investors, manufacturers, farmers, business houses, all required to mitigate risk with the objective to protect oneself from an unforeseen risk. There are ways and means to use hedging strategies to suit one's business requirement. Futures and options are the tool to hedge and should be used diligently to avoid unseen losses. When properly used, hedging strategies reduce uncertainty and limit losses without significantly reducing the potential rate of return. Successful hedging gives the trader protection against price changes, inflation, currency exchange rates, etc. Hedging can also save time as the long-term trades is not required to adjust his portfolio with daily market volatility. In today's economic scenario, there is wide fluctuation in the prices of the commodities, and unhedged positions can result in huge losses if the position is left unhedged. The cost of hedging can be high in terms of investments to be made for margin money and of cost of transactions to be paid, but hedging is required. In today's economic situation, where volatility is high on account of number of unforeseen situations, it is necessary to bear the cost, to mitigate the risk, and to hedge one's exposure to avoid unforeseen losses.
So when you talk about portfolio diversification, what products, Rishi, would you say are important and a big, huge catalyst to ensure commodities is in that space?
The point is that today, if you add more and more asset classes to your portfolio, first of all, the diversification of your portfolio happens and the risk of your portfolio goes down. And this is especially true in the matter of commodities because commodities are counter-cyclical to equities and bonds in the long run. I mean, I will not say for now because at present, because of the global liquidity flow, everything is moving unidirectionally. But in the long run, if you see that when equities and bonds don't do so well, then commodities outperform and vice versa. So it is very important to have commodities in one's portfolio in order to ensure that the portfolio is more diversified. That is why, while I would not like to mention any specific commodity, but it is very important to add commodities to your portfolio. The second reason why you should have a portfolio in your, commodities in your portfolio is that they act as a hedge against inflation. So actually what is inflation? It is nothing but the rising prices of goods and services, and commodities form a part of those goods. So if you invest in commodities, at least you might make a chance of getting a good real rate of return after inflation. And another reason why you should have commodities in your portfolio is that they give you an inbuilt hedge against currency flows. Also, I mean, currency changes. So, for example, if the gold price internationally is 1750 an ounce, $1750 an ounce, and after a month it remains the same, but say the rupee moves from 74 to 75, then naturally you will see that the gold price in India could go up to that extent. So, you would get an inbuilt currency hedge also when you invest in internationally referenced commodities. So, I believe that investing in commodities gives you a real asset. Historically, also, if you see, our ancestors used to invest in commodities in apart from maybe land or other things. So commodities is inbuilt into our DNA, and I believe that, and they are all around us. Whatever we are wearing, we are seeing, we are eating, everything is commodities. They are part of our day-to-day life. So why not invest in something you consume and you are in touch with so much? Even a housewife is in touch with commodities more than maybe the men. So, it's very important that all sorts of investors get into commodities and look at commodities seriously as an asset class.
Is a question for you, Mr. Ramesh. When it comes to institution participation and when it also comes to corporate participation for that matter, how have you seen that grow and what is still desired in this space?
Manisha, there has been a good traction in the recent past with the volatility that we have been seeing in the base metal prices. A lot of these corporates are coming forward and hedging their risk on the MCX platform. So it's been a great platform and the people have been using it. Coming to institutions, yeah, there have been some participations. All these institutions like mutual funds, AIF, CAT3, PMS have been allowed to participate in these markets, and it's more than 3 years now. But the challenge is it's not that everybody is there. Still, there's a long way to go. There are only few participants who have been participating here. And what do these institutions look at? They want good liquidity, good OI, and most importantly, they want long-dated contracts to be available. It's been more than a year that indices has been launched, but we see the traction or volumes, good volumes, only in the current month. So what is desired, as you asked, desired would be far-dated contracts, which should be liquid so that they can come and hedge on this platform.
This one is for you, Mr. Vadwas. When it comes to retailers, when it comes to traders, when it comes to local people who trade into all of these commodities, how better is this platform, proving out for them? And is there enough awareness? Are they coming in on board as well?
So if I take option, it is the safest tool for hedging and amplifying profit if used with the proper risk management. And it is exciting also. So we have all kind of participants in the market, like hedgers are there, arbitragers are there, jobbers are there, and real users are there. So everyone is required in this market to make it a full market. So all participants are there. Option and indices, as we have been discussing today, are the real exciting tools in the market, which where the participation is there. Last, I think 16th of September, we have seen the highest volumes in the options. See, in India, people have, the traders and the jobbers and the arbitragers have learned the art of trading in the options. And they are very much excited wherever there are options available. So in commodity sphere also, going forward, the way options are developing, the way the participation is there, retailers will also jump into it. And only part is that, these option and futures, they are the double sword kind of things. Basically, they have to come well prepared, and there is enough material on the web and the YouTube and the web MCX website also. They can learn the basics of options and various option strategy to participate in these markets.
Rishi, this one is to you. As a new entrant into the commodity markets, what are the basics that one should take into consideration?
First of all, if you want to enter the commodity markets, register yourself with a registered, SEBI-registered intermediary, which is a broker, SEBI-registered broker, who's authorized to trade, because there are many fly-by-night operators or dabba traders, as you call it, don't get into all that, come through registered intermediaries. Second, do your homework. It is better to investigate and then invest rather than vice versa. So please do your homework and then invest. Commodities, like other asset classes, also have their unique characteristics, and investing in commodities also can be very beneficial for you in the long run. So you need to basically get a proper broker and do your research, and then take baby steps into the market if you're new. maybe you could buy options instead of buying a future, because that your downside is limited in options, your upside is more. And then once you feel that, yes, you've got the hang of the market, then you could graduate into other types of contracts, such as futures or index futures, etc.
Thank you, gentlemen, so much. It's always a pleasure to talk to you, and I hope to stay connected. And we do hope that all that we spoke about today has been of benefit to our participants and viewers as well. With that, a big thank you yet again.
MCX IPF and CNBC TV 18 present Commodity Classroom. Commodities as an asset class. Focus. Ideate. Innovate. Enable.